long term in our focus. Keep your eye on the prize. And I do think in the short term, what has happened here, one of the things that's happened is reminiscent of the beginning of 2017, when China shut down all of its exchanges and the Bitcoin's price collapsed. And anyone who bought on that enjoyed one of the most magnificent runs during 2017. Because what we learned is, fine, China shuts down its exchanges and the activity moves to Japan, Korea, Thailand, almost seamlessly. And when people looked around and said, okay, nothing happened there, this just shifted. And we think the same will be true of mining, by the way, and therefore mining will be more transparent than it is in China right now. I think ESG is the second reason that it has gone down. Environmental, social governance, primarily environmental. How is Bitcoin mined? A lot of institutions are asking that question. And ESG has become a very important strategy, especially in Europe, increasingly in the United States. And this was one more risk that it was going to keep institutions from migrating into this new asset class. This is a new asset class. And from 10, 11 years worth of data, we can see the low correlation of returns compared to other assets. Institutional investors have to consider this because certainly their competitors are, as another form of diversification and opportunity. And I think this put that off for a moment. But I think that the spotlight on the environment is going to cause something really interesting to happen here. We just wrote a paper with Square about the ramifications of putting Bitcoin mining into a solar power wall merchant power ecosystem so that it could absorb all the extra energy coming from the sun after the battery, the power pack is filled up. That would add a new dimension of economics to this ecosystem and would encourage homeowners and utilities to add more solar to their own ecosystems than otherwise would be the case. So it's actually going to accelerate the movement into renewables. I think that's what's going to bring institutions back. And I think Elon Musk highlighting, is this a risk that I have considered adequately as I put Bitcoin on my balance sheet, my firm's balance sheet? I think he's going to be a part of the solution. So we think what has happened here is actually going to turn into good news.
And I just want to add something, if you guys don't mind. You had $1 trillion+ taken out of the marketplace. If you factor in all the altcoins, what happened to Bitcoin. And yet I want you to think about the power of decentralized finance. If that would have happened to the banking system, or if that would have happened in 2008, we would have been awash in a crisis, a stock market crisis. The Fed would have had to come in with the cardiac pumps and clamps and jammed hundreds of billions of dollars into the economy. And so when you think about the shock of losing $1 trillion of value, and yet the system cleared itself beautifully. And so in a very weird way, there's an anti-fragility to what took place over the last 2 or 3 weeks. Cathie, do you agree with that?
Yeah, absolutely. I was keeping very close contact with my friends in the DeFi space, particularly venture funds deeply involved in it, and monitoring. And it seemed to go pretty flawlessly. Of course, there are some bankruptcies out there, and businesses that are not going to exist. But this is the natural clearing process. If you want to take on that leverage, that's the kind of risk you're taking, and just know that. So I think each one of these corrections, certainly the coronavirus was a battle test, and now this one is a battle test. I think each one brings with it improvements in governance, but also proves out, as Anthony says, how robust this decentralized ecosystem is.
Hey, Anthony, I would like to ask you a question, and it's kind of coupling off what you guys were just talking about the robustness of Bitcoin through the volatility. What was the institutional reaction from at first Elon's tweets, which seemingly bullish or bearish, move the market? And Bitcoin, just like any other asset, is trading at the margin, right? The price is set at the margin short term, especially with these derivative markets. What was the reaction to that? Near $1 trillion asset class is being sent up or down depending on one man's tweets. And how did you respond to those questions?
So look, I think I have an interesting vantage point, and I know Cathie has perhaps a different perspective. I have 34 hedge fund managers in my core fund, which is about $9 billion, including people like Dan Loeb that are now Bitcoiners. I've got a tracking of about 1,200 funds that our research department here tracks. And then, of course, we have the SALT conference, where we probably have had 100 or so thousand people over 10 years traffic through the conferences or the SALT Talk series, et cetera. So we're doing a lot of surveys, a lot of analytics. Again, this is just my opinion, and it's probably a sample that's biased. I don't think there's a lot of institutions that are heavily invested in Bitcoin. Now, Cathie's a large institution. She's invested. Are there disruptive institutions that are invested? Yes. But I don't even think we're in innings. When somebody asks me a baseball metaphor, what inning are we in? I don't even think we've left spring training yet. We forget about the innings. We haven't even got to the stadium yet in terms of where we're going to be and in terms of the ultimate saturation. So I would say that these price shocks, if you will, are probably bigger speed bumps for the staid institutions. And I'm going to take Cathie down the road of FUD for Amazon. How many institutions over 20 years hated on Amazon, didn't believe its story, couldn't believe that it had a market cap larger than Sears back in 1999, had no earnings, no discernible earnings, and yet it sits here today as this great colossus, and Jeff Bezos as the richest person on planet Earth. And so the point I'm making is maybe Cathie sees it differently, but I think the institutional demand was starting. I think it has stopped. I think it will eventually start again. The institutions are going to get pulled into this thing the way Morgan Stanley got pulled into it. How did Morgan Stanley get pulled into it? In my opinion, the clients pulled Morgan Stanley into it. They said, hey, you know what? I got to have this on my platform. Otherwise, the clients are going to migrate to some other firm. And so therefore, I need to have this at the buffet table. And so we're not there yet with any level of institutional saturation. And in my opinion, there lies this unbelievable opportunity.
Yeah, I can echo what Anthony is saying. I will say we heard that some institutions were taking advantage of this 50% drop in the price. They had been worried about top ticking. And I think they believe that half of the solution is understanding the problem in terms of ESG and just putting a spotlight on it. So I think some institutions have been opportunistic, but not very many. I think this was more of a showstopper, at least temporarily, for a lot of institutions. In terms of the idea that one person's tweet could cause this amount of damage, well, we've been involved with Tesla, you might know, for a very long time. And we are getting used to this and use these opportunities as do you
think he was smoking a blunt while he was sending out those tweets? I'm just asking for us.
No, I think he was probably just after a call with Larry Fink at BlackRock, who's his number 3 shareholder, who's all about climate change, and probably set off some of this furor, if I had to guess. And there are also in the top of the league tables in terms of owners of Tesla, there are a lot of European institutions. And again, very high sensitivity, probably more than Elon could have imagined before he committed and his team committed to Bitcoin.
I think this is a good transition point to, talking about the ESG component of, what Bitcoin means for the environment. Personally, for me, I kind of agree with you, Cathie, that I believe that Bitcoin unlocks a opportunity and incentive to build out green tech, to build out energy infrastructure in general, and kind of localize and make it more robust.